$600. That's what I made on my first real side hustle. I thought it was the cleanest money I'd ever earned. No employer, no deductions, straight into my account. I was wrong. And the number I got wrong by was $180. You might be thinking, $180 isn't a disaster, and you're right. But that's not the point. The point is that I had no idea I owed it. Zero awareness that the way side hustle income is taxed is fundamentally different from a W-2 paycheck. And the difference almost caught me completely off guard. Because here's the thing, nobody explains clearly when you start your first side gig. The government doesn't just take income tax from your side hustle earnings. They take income tax plus a self-employment tax. And that second number is one most people never see coming. I'm going to show you exactly what it is, how to calculate it, and the one rule I built so I never have this problem again. This is not tax advice. I'm not a CPA. Everything I'm going to show you is based on irs.gov guidance and the self-employment tax rules for 2025 to 2026. Always verify with a tax professional for your specific situation. Links to the IRS resources I used are in the description. What I can do is show you the math I ran on my own $600 because it's the math that applies to almost anyone earning any amount from a side gig. Here's why side hustle income is different. When you have a regular W-2 job, your employer pays half of your Social Security and Medicare taxes for you. They take their 7.65% and you pay 7.65%. The split is invisible. You never see it happen. When you work for yourself, even one $600 gig, there's no employer to split with. You pay both halves, the full 15.3%. That's the self-employment tax, and it's calculated before income tax, so it's not replacing your income tax obligation. It's added on top. Let me show you exactly what happened when I ran the numbers on my $600. Step 1. Self-employment tax. IRS says if your net self-employment income is $400 or more, you owe SE tax. $600 x 92.35%. IRS adjustment factor equal sign $554.10 net. $554.10 x 15.3% equal sign $84.78 in SE tax. Step 2. Income tax. The $600 gets added to my regular income. Assuming I'm in the 22% bracket, and the numbers get a bit complex here based on total income. The $600 adds roughly $132 in federal income tax liability. Total, approximately $216 in taxes on a $600 gig. More than I thought. Less than the $180 I was originally alarmed by, because I initially forgot the SE tax deduction you can take. The actual number landed at about $180 after accounting for the SE tax deduction on my Schedule SE. Now here's where it gets more complicated, in a way that actually works against you if you don't know about it. There's a second layer to this most people don't find until they're already in trouble. If your total self-employment income for the year is expected to be more than $1,000 in taxes owed, the IRS expects quarterly estimated payments, 4 times a year, not once at April 15th. If you skip these quarterly payments, even accidentally, the IRS charges an underpayment penalty. It's currently about 8% annualized on the amount you should have paid each quarter. Here's the number that stopped me. 73% of first-time gig workers don't know about quarterly estimated taxes until they file their first Schedule C. That data comes from a 2024 QuickBooks survey of 1,500 self-employed Americans. 3 out of 4 people doing their first side hustle get surprised by this. You're in very good company if you didn't know either. Before I figured out the system that works, I tried just mentally setting aside some money for taxes. After I got paid $600, I moved about $100 to the far corner of my checking account and told myself it was for taxes. 3 weeks later, I needed car repairs. The sum money became the emergency fund, which became the repair fund. By the time I thought about taxes again, the mental set-aside was gone. The reason that approach doesn't work is that money in your main account is not ring-fenced. Your brain doesn't treat it as already spent. So eventually, it gets spent. That failure is what led me to the dedicated bucket system in ACT 3A. Here is the system I actually built. It has exactly one rule. The rule: when any side hustle payment lands in my account, any amount, I immediately transfer 30% to a dedicated savings account labeled tax bucket. Not the next day, that day. Why 30%? The math? 15.3% for SE tax plus up to 22% income tax bracket equal. Sign up to 37.3% theoretical maximum. But after the SE tax deduction, you can deduct half of the SE tax from your income. The effective combined rate drops to approximately 27 to 30% for most people in the 22% bracket. 30% is the safe rounding up number. The dedicated account matters. It should not be your main savings account. It needs to be labelled clearly, so your brain knows it doesn't belong to you. Many banks let you create sub-accounts with custom labels for free. I use one that pays 4.5% WISA interest, so the tax money earns interest while it waits. I have to be honest about something. I was treating side hustle income as free money for almost 2 years before I ran these numbers. 2 years of absorbing tax exposure without any plan. Here's what that actually cost me. In underpayment penalties alone, I owe an estimated $34 for this year. Not catastrophic, but that's the version of the lesson where I caught it relatively early. The 30% rule is the floor, not the ceiling. As your side hustle grows, a CPA becomes worth it. But until you're consistently making more than $2,000, $3,000 per month from a side gig, the 30% bucket rule handles the math automatically. Next, I'm going to set up my first quarterly estimated tax payment, Form 1040 ES. I'll show you exactly how to calculate the amount, what the payment options are, and what happens if you miss a deadline. Subscribe because that process was more confusing than I expected. And I want to show you the step I almost got wrong. If you're earning any money outside of a regular paycheck right now, even occasional amounts, this video applies to you. The sooner you build the 30% habit, the less painful tax season gets. This is part of the WealthFlick money system. The full series link is in the description. I read every comment. Drop below. Have you ever gotten a surprise tax bill from a side gig? Right up there is the video that started this whole journey. I opened my first brokerage account with $50. Turns out the brokerage income question comes back around in a very specific way. And subscribe, because the quarterly tax payment walkthrough is coming next.